Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, JMR Infra is the stock you should look at. Just take a look at that. The street is definitely taking note of that big CNBC TV18 exclusive. The stock has moved to the high point of the day. So keep that in mind. JMR Airports could be listed. And that's the reason why, in fact, the street is quite excited. The stock has further gained in today's trading session, now currently at the day's high. But though the Nifty is looking like it's sitting with big gains of around 95 points odd, we're doing well actually, because I was looking at the Asian markets and some of those markets have come off the high point of the day. The Shanghai market was trading in the green. Now that's down close to around 1%. And the Hang Seng is on the verge of moving into the red. I think it makes sense to pull up an intraday chart. Yeah, that's my director has already pulled it up for you all. You see, that the Hang Seng has given up nearly around 200 points from the top of the day. And it's all on the verge of moving into the red. So good to see that, the Indian markets, they're just doing their own thing. We're still sitting with a gain of around 95 points odd. We're moving on our own steam, it seems, as we speak. But as I told you earlier, we've done a U-turn from 11,500 earlier. So I'll be interested to know whether or not the bulls have enough in them to go ahead and conquer that mark. That we'll know in the next couple of hours. But we have Ashwani Gujral as well as Prakash Gaba. Both of them are with us. Good day, gentlemen. Friday afternoon. What's the trade on the Nifty? As well as the Nifty Bank's doing well, actually. It's outperforming the Nifty in today's trading session, up more than 1%. Ashwani, what's the trade on the Nifty?
So on the Nifty, we are now, sitting very close to previous highs, and overall the market looks strong. The breadth is nice. So the idea is to go long now. Sometimes, previous highs, things can dither a bit, but I'm willing to take that risk. Take a stop about 11,450 thereabouts, and on the Bank Nifty put a 100-point stop. My sense is that the market is poised to get beyond 11,500. Now, whether that happens today or on Monday or next week, that is a question. But I don't think 11,500 is really taking the market lower. And slowly, I think the bulls are getting that message. Having said that, metals is the top performing sector today. So JSW Steel is a buy with a stop of 328, target of 345. Vedanta is a buy with a stop of 210, target of 225. And JSPL is a buy with a stop of 194, target of 208.
Interesting. Some of the metals are back in flavor today. They were beaten down yesterday, but with the global recovery last 24 hours, European markets are flat at the moment. So let's just see how things build in the second half. Ashwani is keeping the faith on the long side for now. Prakash, thanks for being with us as well. What are your trades at the moment?
Well, I have two stocks. Looks like Bank Nifty and Bank Nifty both are looking up to me. So there should be some. If a dip comes in, those would be buying opportunities. 11,500 is an area. 505 is an area where it could go if it wants to go. I have two stocks here, and both on the long side. I have Kotak Mahindra Bank. That looks good to me. Kotak Mahindra Bank can climb to levels closer to around 1290 zones. Stop below 1250, and I have Tata Steel. Tata Steel has seen good buying here. This should consolidate. I think it can go up to levels closer to 595, stop below 575. I think it's a buy for today and tomorrow.
Okay. All right, gentlemen. Thank you very much for those trading ideas. As we just mentioned, European markets opening out for the day slightly quieter. They've had their share of the rally yesterday as well. But let's see the questions. Will they build on more? Because by the end, Dow was up 400 points. So is there any residual action that we will see today or not? That is a talking point. Right now, things are quite flat. Get you another CNBC TV18 exclusive. Lata Venkatesh caught up with Principal Economic Advisor Sanjeev Sanyal and began by asking him about the math of trade deficit numbers from the April to July period and whether the current account deficit widening to about 3% would be a big worry or not. Take a look.
We watch these numbers obviously very closely, and we are always concerned about the trends in it. But as things stand, there's nothing particular to be concerned about, and we need to be careful about extrapolating a couple of months' data either which way. So just like we don't celebrate a couple of months of good data, we will not celebrate a couple of months if the trade deficit widens a bit.
No, but the trade deficit has widened at a time when crude was not at its highest. Crude had receded considerably from $80.
Well, it's still at very elevated levels, as you know. So it is something we watch carefully. So it is not, remember, this it has come down. The numbers you are getting is not related to the recent come down. So
it was the July,
yes,
it's
so
the July number, but even in July it was not 80, it was more at 74,
yes, but the
75.
contract for that would have been done earlier.
Okay. So are you saying that it can come down on its own? Because Indonesia has actually started some administrative controls on imports.
No, so we will watch this, but we are not into doing administrative controls, as you know. And anyway, as I said, extrapolating 2 months of data in either direction is not a particularly good idea.
No, not a question of extrapolation, but since there is no one-off, since everything is growing,
as I said,
steel,
let me reiterate that extrapolating 2 months of data in either direction is not very helpful.
Okay, but is not current account deficit a worry?
No, we
at
watch
all
it very
for you?
carefully. Of course we watch. We're always a worry. Even the good times we worry about it.
Is that the reason why the rupee was allowed to depreciate?
No, the rupee is managed, at least for the last 3 decades, using exactly the same formula and framework which the Reserve Bank has been using, which is the following, that the rupee is allowed to find its own level in the long to medium term. The Reserve Bank, however, has a long-held policy of controlling volatility, which it has more than adequate foreign exchange reserves to do in either direction. So just a few months ago, it was appreciating very strongly, and it was accumulating foreign exchange reserves. And now that it is has been weakening, it has been controlling the volatility on the other side by using up the reserves. That's what the reserves are there for, and they are, doing exactly what they have done for now decades. It's a well-established policy. Now, as far as the economics of it is, remember, I'm sure you've heard of something called the impossible trinity.
Yes.
If you have a relatively open current account, then you have to opt for either the monetary policy or the exchange rate in the long to medium term. Now, because we have now an explicit monetary policy committee-based system, clearly we have opted for monetary policy. So now, other than obviously extreme situations where we may use capital controls, which we normally don't, and allowing for some use of foreign exchange reserves to temper volatility, we will now allow in this format explicitly allow the rupee to find its own level. Again, whether it's the economics or long-held practice, we are basically doing what is the appropriate thing to do.
Okay. No, is the government's view or your view that a correction in the exchange rate is enough to bring the trade deficit and the current account deficit
As
under
I said,
control?
the rupee will find its own level. Now, one important thing that is always forgotten in all of this is that when you're thinking about competitiveness, which I think is what you're hinting at, we have to think about not just the bilateral exchange rate vis-a-vis the dollar. The rupee has indeed been weakening against the dollar, but if you look at the last 5 years, it has been very, very solidly stable. In fact, has appreciated, in fact, against virtually every other major exchange rate. So whether it's the euro or the pound sterling or the yen or, in fact, even the Chinese yuan, against whom obviously we should, from a competitiveness perspective, keep a watch. Against all these currencies, we have been broadly stable. So the point is that what is really happening is, given various external factors, including the Turkey situation, the dollar is strengthening.
Yes.
I think the better way to think about it is the dollar is strengthening. The rest of us are weakening consequently, because by definition everybody else weakens. Our exchange rate with pretty much everybody else is stable. So I don't think there's any reason to jump to any conclusion, panic, or any other thing. And I think, in fact, I would be far more concerned if the central bank suddenly opt for a new and untried policy. It is doing exactly what it has done for a long, long time, allowed the long-term adjustment, managed the volatility, and of course, in the very long term, we also look at the real effective exchange rate, which is based on a basket of currencies against whom, as I said, we are very, very stable.
Hang Seng, actually, let's see how that market is doing. Just a short while back, we were telling you that the market has come off nearly around 200 points from the top of the day. So the intraday chart should come up for you. And in terms of the Nifty, well, we have come off very, very mildly from the top. Eicher Motors is the stock that's come in for some profit booking. And you have a Bajaj Finance as well. That's seen some mild profit booking in the last few minutes. So both those two stocks should come up for you on your screen from the Nifty pack. Eicher Motors and Bajaj Finance, both of them. Seen some selling from the broader markets, actually. It's time for a coffee, it seems. news because Cafe Coffee Day, that stock has suddenly spiked up. Volumes as well picking up on that one. I wonder whether there is any news flow or in fact there's a bit of a volume spike on that stock. But let's tell you about IOL Chemicals. Remember, they posted a rather good set of numbers in the first quarter, but importantly, the management joined us earlier today and said that the key drug, that's ibuprofen prices, have rocketed both domestically as well as internationally. Let's hear out what the management had to tell us.
20% price increase is in Indian market, whereas in international market prices has gone up by 30%. Prices are sustainable because the demand was vis-a-vis supply. There is a big gap because of some pollution issues in China, coupled with some problem in the manufacturing sites at US. So this has increased the demand. Even demand is also increasing as far as ibuprofen consumption is concerned. What we foresee is that ibuprofen capacity enhancement announced by BASF US, that plant they are coming up in 2021. So till then we don't foresee that this demand supply gap will be filled up by anybody.
Okay, that's the word from IOL Chemicals on their outlook going ahead. Let's move to an interesting conversation now. Well, the retail sector is always buzzing around, and one giant that has taken giant strides in the last couple of months is, of course, Reliance Retail. Lots of talk about their growth prospects going forward, whether the numbers will keep getting bigger and bigger. Well, Mangalam caught up with the CEO of Reliance Retail, Damodar Mal, to find out exactly that. Here's a slice of that exclusive conversation. This one is from our special show called The Weekender.
We thought it was the brick and mortar, then it became click, and now it looks like it's click and mortar. So omni-channel is the way to go?
In the post-Geo era, anybody shopping at a supermarket, the definition of customer is a human being and a smartphone, never separated.
Okay.
Now, when we imagine customer as this entity, which is a human and a smartphone fused always, it opens up possibilities like the customer can ping my store and say, I'm going to come and shop half an hour later. The store knows things that she normally buys and can suggest those things to her. And she can say, yeah, I'm on the way, but yeah, just keep my trolley ready with these 6 items and then I will start shopping. I think we have only started imagining the possibilities that will unfold as we go along.
Does real estate limit the expansion of a supermarket?
No, there is frenzy when there is hyper expansion, demand supply mismatch when it happens. But these are also markets and equilibrium happens. I think it's an equilibrium which has got established. People have made their mistakes, but on the whole, we are now.
So what do you think is a better model? Is it owning the land that you have your store on, or is it leasing the land that you have your store on?
I would say both, and we at Reliance Retail do a mix of these. When you lease, it gives you flexibility and speed. When you own, it gives you stability, but it anchors you to your mistakes, which are difficult to get out of.
What I'm trying to understand is, from Reliance's perspective, of course, yes, and from also the perspective of, say, something like a D-Mart and Future Retail. D-Mart is someone who's at one end of the extreme. The other one is Future Retail, which has most of its stores which are leased.
I don't find merit in being dogmatic about one way or the other.
Okay.
I think the catchment, the opportunity.
What's the mix in Reliance right now?
It's a fair mix. About a third of our stores are owned or in our things. I think so. The bigger stores, we tend to do a mix of them.
Metals prices, where we have seen a lot of choppiness actually in this week, and even as we are looking at some buying on the Shanghai today, most of these metals are headed for a weekly decline. Actually, most of these metals are down 16 to 26% from their June highs. The reason that you have seen some buying come back today really is because the markets are keeping an eye on the US-China meeting in the next week, the delegation that's going to Washington to talk out the trade war concerns. Also, the US dollar is off its 13-month highs. Turkish lira is back. It's rebounded quite strongly. Some of those factors really have been supportive for the metals into buying as well. It really has been a short squeeze rally of kinds because you have seen most of these metals decline quite sharply over the previous week and this week as well. Take a look at the copper prices, and we are down 20% from 52-week highs. Copper is down 4.5% in this week as well. It is about the emerging market currencies being on the weaker side as well, which seems to be putting pressure. So while we did start the day in the positive, that really seems to be turning around now. While the Shanghai metals are doing well, we have seen pressure come back in case of LME metals, and that has taken the Indian metal prices on the weaker side. Himanshu Gupta of Carvey now joins us to talk more about that. Himanshu, hi. What is your sense for the metal prices? It has been quite choppy. We haven't been able to see a direction, while of course on the lower side, but every uptick has been sold into. Is that how you see the pattern continue?
Hi Manisha, good afternoon. Well, clearly this week has been, we have seen some sharp declines across the commodities, and metals are no exception to this. But if going forward, if one has to take a trade, I think the markets are already oversold, and I would not be a great advocate of taking fresh short positions hereafter. As you rightly said, the markets would be awaiting for the outcome of the meeting between the Beijing and the U.S. authorities. And if anything positive or some positive news flow is seen thereafter, I would not be surprised to see a very strong pullback recovery rally across the metals. Select metals like zinc are particularly looking oversold, and we have already seen some kind of positive news flows hitting the markets, like China announcing quadrupling its fixed asset investments and the output falling to the lowest since 2013. So I'll be looking to go long on declines, and I would be waiting on the sidelines to get proper entry levels rather than attempting a short at the current levels.
Sure. And what's also your sense coming in for the gold and silver prices? Because we've seen some buying come here. Again, is it just a case because it's been oversold and we're seeing some short covering, or would you see some serious buying happening at these levels?
Well, see, typically gold and silver have been showing some weakness of late. But talking about gold first, I think $1160, $1158 was a long-term technical target that we were working upon, and I will not be surprised if the market sees some short covering rallying hereafter. Also, we are heading towards some festive season where the physical demand tends to pick up in Asian countries like India. So I'll be expecting some recovery in the gold prices in the immediate short term. And similarly in silver, we have also seen a strong support being tested around $14.50 on the international markets and $36,000 per kg on the Indian markets. So expect a recovery in gold and silver prices, but whether if it's sustainable or not, we have to wait and watch. But I think going long around the current levels is a strategy that we'll be working upon.